How's it going, everybody? If you are in commercial real estate and maybe you own an older building here in Michigan, maybe you own an older property that was built in the early 1900s in Detroit, you've probably noticed that having replacement cost on that property on your insurance policy can get pretty expensive. So it can be common for a lot of property owners to either choose actual cash value coverage, or maybe it's presented to them by their insurance broker, or maybe that's all the underwriting companies will offer. So today I wanted to go over what actual cash value coverage actually means on a commercial building that is maybe a little bit older and what that might look like in a claim scenario. Thank you for stopping by. My name is Brian. I'm an independent insurance agent based here in the state of Michigan, Metro Detroit specifically, and I work with businesses on their commercial insurance programs as well as helping families and individuals with their personal insurance, their home, their auto insurance as well. My goal with this channel is to pass on a little bit of educational information to you so that you can make more informed decisions around your insurance, and then overall help answer any questions that you might have. So let's get into it. And before we get too far into the video, I do want to invite you to subscribe to the channel. And if you find this video helpful, useful, anything like that, please feel free to like, share, pass it along with anyone else as well. So when you insure a commercial property on a replacement cost basis, that means that the policy will pay for what it actually costs to rebuild or repair the property using the current cost of today's materials, labor, everything like that, without factoring in depreciation. Now, if your policy is written on an actual cash value coverage basis, this means that it is essentially replacement cost minus depreciation. So you still want to make sure that that coverage amount is accurate based on things like the age of the property, the square footage, how many stories it is. But when it comes to the actual coverage that you're getting with actual cash value, the insurance company will take into account things like the age of the property, the wear and tear, how well it's been maintained, if there's been any updates. They'll take these into account during a claim situation. So let's say you have a $2 million coverage limit on an older building that hasn't been updated recently. If there is a major loss, that doesn't necessarily mean you'll get that full $2 million amount. Because let's say you have a 100-year-old building that was built in the early 1900s. It burns to the ground, it's a total loss. With replacement cost coverage, you would have the coverage in place for what it costs to rebuild today, which would probably be close to that $2 million amount. But with actual cash value coverage, depreciation is taken into account. So let's say the building is in average condition for a 1920s property. There haven't been any major updates or renovations. The systems are a bit aging. The payout on a major claim like that might only be $1.2 to $1.4 million. It's going to depend on a lot of different factors, how much wear and tear the property has. And the range of coverage that you'd have can vary quite a bit depending on your building specific situation and depending on how the policy is written and the insurance company that you're working with. Some companies may even cap that coverage amount at the building's fair market value. And it's also important to note that even for smaller claims like a pipe burst or maybe a roof leak, actual cash value coverage will apply to that damaged portion. So if a pipe burst causes $200,000 in damage, you wouldn't necessarily get that full $200,000 amount. The insurance company would deduct for maybe older materials and wear and tear again. So in this case, you might only receive $100,000 to $120,000. And now you might be thinking, well, who would actually choose actual cash value coverage over replacement cost? Well, depending on the insurance company and the specific situation of your building, replacement cost could be anywhere from 20 to 40% more in premium. And also you might run into situations where the underwriting company will only offer coverage terms on an actual cash value basis. Unfortunately, this is becoming a lot more common today. And if you do maybe have an older property, it can sometimes be tough to justify that increased cost. So this is why many owners, investors will sometimes choose actual cash value coverage, just because it sometimes is more aligned with what the property is actually worth and also just what they're willing to pay in terms of insurance costs. So while in nearly almost every situation, I will almost always recommend having replacement cost on a property, sometimes it just doesn't make sense. And having actual cash value coverage probably gives your building coverage a little bit closer to what the actual market value of the property is. And it's definitely important to understand the coverage that you actually have in place in case a loss ever does happen. So thank you for watching. And if you are looking for help with maybe your commercial property insurance or insurance as a whole, I would love the opportunity to work with you and see if our team can help. There are a lot of ways to get a hold of me and they should all be in the description below. Please feel free to text, call, email, fill out a contact form, whatever's easiest. And if you have any other questions about insurance, please feel free to reach out directly or leave them in the comments below. I would love to help answer those as well. So thank you again.